Good evening, everybody, and welcome to another edition of Live Market Analysis. It's a pleasure to be joining you on a Monday evening as we get ready to discuss everything markets and everything trading. Before we do, it's important to talk about the disclaimer, which says that everything we're going to discuss tonight is general in nature. That means it has not taken into account your personal financial perspectives, needs, requirements, objectives, all of that stuff before you act upon any of this. Very general information. You should consider it all very carefully or seek the help of a financial professional to determine its appropriateness for you. It's important to remember that trading and investing is risky. You will endure losses at some stage. It's inevitable. Ultimately, it's you, not I, who's responsible for everything you choose to do. With that in mind, let's get to the agenda for today, which is where I answer your questions, whether it be stock related, index, commodity, crypto, bonds, foreign exchange, anything I can get a chart on, I'll do that analysis for you, or if it's something to do with trading. So we often talk about the 3 M's, the methodology, the mindset, and the money management. Everything is fair game for you this evening. Let's kick off with some offline requests, and we're going to go firstly to our, actually got that wrong, not the offline requests, we're going to do the whip around the grounds. We always start with our portfolio management model, don't we? And that's where we determine how much of our total risk we're going to have allocated to markets, and we use 2 major benchmarks, the Nasdaq composite you can see on screen here. I prefer to use this than the Nasdaq 100. Nasdaq 100 for some reason seems to be more popular, but as the name suggests, it's only got 100, albeit of the bigger stocks in it. The composite has nearly 5,000 stocks in it, so it's a much broader representation of the US market, although we know the big caps do dominate. The other one is the ASX 200. We'll get to that in a second. The gist of it is, if there's no reason, to fight the trend here, we'll be fully invested. I can't say that's the case at this stage. We're seeing, to be fair, a bit of congestion and consolidation between, say, 18,831 and 2205. You can see the choppiness of the peaks and troughs in there. We couldn't really say whether the price action is definitively higher peaks and higher troughs, and that would indicate, think about it, higher troughs is demand reinforcement, higher peaks means supply removal, and that's good for demand side control and good for us being invested, or the opposite, which is the lower peaks and lower troughs. And the candles, well, I'm going to say the candles are predominantly white. I think it's fair to say, certainly since the 18,831 point of demand, more white candle bodies than black ones, and a few downward pointing shadows as well. There are a few black ones punctuating, but let's say we're slightly demand side there. So the long-term trend, I should mention that also, is very clearly set to the upside. That is absolutely unequivocal demand side control. So we're getting a little bit of a mixture, aren't we? We're getting a bit of a short-term equilibrium with a bit of, candles aren't too bad, and then we've got that demand side control. So overall, I think I said last week we're 2/3 invested, which means 1/3 cash. I can't see any reason to change that this week. What could change it? A close above 2025, or in advance of that, I reckon you could go with a strong high close, so a nice big white candle high close above that high there, which is 19,970. Okay, so we're here every Monday. We'll discuss it. If it happens between now and then, that's your cue to go to full risk position. Probably worth also talking about what would be the cue to take another third off the table. I think a close beneath 19,141 with big black candle would suffice. And if it's just a bit of a dribble and not that clear definitive candle below 19,141, if it's just a dribble, a few whites, a few blacks, then definitely a close between 18,831 would get us down to 1/3 risk only. Looking at Aussie stocks now, it's much better. We've got a clearly defined short-term uptrend still, and long-term uptrend obviously, but the price action is much better for the most part. It's higher peaks and higher troughs. I say for the most part because, to be fair, that last trough there at 83.53 is a smidge lower than that trough there at 18.66. So technically it's not, is it? Because we've actually got a lower peak here as well. So technically it's lower peaks, lower troughs to the level where it is. But I think if we were to apply that strictly, we would be missing the bigger picture here, which is still pretty solid, and we're going to say a predominance of demand side candles, although that one there is a doozy. So I can't see any reason not to be full risk position at this stage. I think that's where we are. I think pretty sure that's where we moved to last week, but last week we were sans that big black candle. That big black candle a result. It doesn't matter why it is, it just is. But if you were wondering, it's a result of some Trump tariff uncertainty, and we should expect plenty of that to come. At the end of the day, markets vote with their cash and they vote with their supply, and that's what we're seeing here. So, tune down the noise and tune up your observance of price action candles and trends. The short-term and long-term trend ribbons perfectly supportive, perfectly supportive of the price there, dynamic demand. Okay, going to move to the red flag watch. Is there anything that could push us off this idea of 2/3 invested in the USA and fully invested in Australia? Well, I like to look at the Russell 2000 because it is a much broader measure than the S&P 500, for example. Not quite as broad as the Nasdaq, but where it beats the Nasdaq is that the top stocks, for example, the Nasdaq top 10 is about order of magnitude 30 or 40% of the whole index. Here, the top 10 is about 5% of the whole index. So if the broad market's really bad, it's going to show up here. And it's not the case. Hey, it's not shooting the lights out either. It's pretty much sideways. But we're looking for red flags, and that's not it. Looking to Europe, we've actually seen some pretty decent price moves there. In France, that's a very strong looking chart, as is the DAX in Germany. Make America great again seems to be making Europe great again for some reason. FTSE 100 looking the best of the lot of them, dare I say. Very similar market to ours. It's basically a bunch of big resource companies, big banks. I'm oversimplifying, but it is similar to ours in that regard. And the Spanish market is the best. Don't ask me what are the major themes in the Spanish market, because I don't know. Asian markets came back from their Chinese New Year celebration holidays. Hang Seng has had a really strong rally since last week. The Nikkei hasn't done a thing. Again, we're looking for red flags, so we're not finding them. The Nifty 50 in India, not great. And the Shanghai Composite, sideways there on the A50, which is the shares that Chinese mainland funds and citizens can buy. And then these are the B shares where everybody can buy, and they're neutral to looking half decent. I've seen some signals today actually on some of the ETFs. You'll see that in the watch list for tomorrow. IZZ is the ticker code off the top of my head. It looks pretty good. Just a quick whip around the grounds on the Australian market. What are the best sectors locally? Discretionary still looks fine. Energy still looks pretty awful. Financials still looks excellent. Gold still looks excellent. Healthcare looks pretty ordinary. Technology still looks fine. Materials, neither here nor there. Same with resources. Property, neither here nor there. Staples, I'm going to say neither here nor there, but maybe a couple of white candles at the end. They're firming things. Telecommunications, sideways. Utilities starting to roll over, which tells you actually there's just a small handful of sectors that are looking good for us trend followers in Australia. While we're here, we'll check the base metals, and we have seen a bit of a rally despite some of this Trump uncertainty. Aluminium, they're trending higher since our last update. Copper, actually nicely higher since our last update. I've been writing about that in ChartWatch on the market index evening wraps. Definitely check that out if you haven't already. I know that is not going to tell us anything, but it will in just a second when I get rid of that. Iron ore starting to turn up. I've got a different chart for you coming up. Nickel also turning up, but off some pretty horrific lows. Lead similar to nickel. Tin actually looking pretty good again. And zinc, which we said was rolling over last week, is actually trying to recover. So fairly, positive leads there from the base metals complex. Lithium hasn't really done anything since our last update. We're going to have a look at the precious metals charts on the trading review window where we're heading now. And lo and behold, there is the silver futures chart. I wrote about this during the week. I said starting to look good again, or something along those lines. And look, it is. Short-term trend is re-established. The price action generally, rising peaks and rising troughs, and I think candles are more and more skewing towards the demand side. The long-term trend is still intact. And whilst that's all wonderful in its own regard, everything's relative. And relative to gold, silver is a distant second. boom, boom. Gold looks absolutely fantastic there. There's nothing in this chart which just implies, it just gives you even an inkling of supply side control. It is 100% demand side control, and whilst that's the case, really us trend followers only have one thing to do about it. I talked about copper looking much better. That's the high grade compared to the London Metals Exchange version we saw earlier, and decent little recovery there. But as I do say in my chart watch analysis, there's kind of ranges within ranges to deal with. But for what it's worth, I think that's starting to look much better. Iron ore, I don't think that's going anywhere in a great hurry, but it doesn't need to. These prices are fantastic for our iron ore miners, and there's a very slight short-term uptrend there. Looks pretty intact there. Something that doesn't look so intact is the uranium price. I might put a line chart on for you can see that a little bit better. Still trending down there. Can't see any light at the end of that tunnel. Happy to concede when it does turn around, high peaks, high troughs, that'll tell the story, much like natural gas eventually did turn around. That looks okay. Let's go back to the candles because we have them. Let's go to West Texas crude oil. I mentioned in the chart watch that look, it's at a key demand level there, both in terms of the long-term uptrend. We'll see it on Brent also in a second, but the consolidation zone from the past, there it is on Brent. Looking very similar, but also bouncing off that demand zone there, both dynamic and static. The thermal coal price continues to fall, and the metallurgical coal price continues to fall also. There's usually some sort of correlation between this and iron ore. It makes sense, they're both critical components in the steel making process, but they seem to have decoupled. Let us head over to the interest rate markets now, and we'll check up on what the price of money is doing. Price of money generally trending lower since our last update, but there was a bit of a reversal, a bit of a rally on Friday in yields. I've kind of said that wrong because of rally in yields. What that really means is that bonds were sold off, because when bond prices go down, bond yields go up. It's an inverse relationship. And that's not ideal for stocks, and that's why we've seen weakness in stocks Friday and today. But overall, we're still much better than we were when these were pushing, unbearably higher and towards 5%. So I'm going to say we're okay there. And in Australia, we've actually seen a bit of a deeper pullback as markets are now factoring in a rate cut as soon as February. I didn't think it was possible. If you asked me a few months ago, I'm still not 100% sure it's going to happen. I think they will go in the March, April one or the May one more likely, and just give us a reason to be patient at the upcoming meeting. Let's look. We've had a look at Chinese markets, but no harm to look at them again, because we've got some of the property indices here, and really until some of these property indices recover, we're probably not going to expect anything meaningful from China. But at least for the very short term, at least it looks like they've stopped going down. The only thing else to check here, and it's not a problem anymore, but we used to check it at one stage, didn't we, as a red flag, are the US banking indices, and it looks like all banking crises are reverted there. That is the whip around the grounds. As I promised you earlier, I said we would kick off tonight's analysis with offline requests. And I've actually only got one from Australia and one from the US, which is wonderful, because we can get to all your online stuff very quickly. And they are from, firstly, let's go to Mick, who's got SKS. And look, it's one that's done very, very well, but I think we've got some problems here. And I like to do this, like to go back and say, well, what could we have done? Because, look, I don't know who's got it and who's maybe has done something with it, and they want some affirmation that they've done the right thing, or they haven't done anything with it and they'd like to know whether they should have. I'd probably look at that candle first and say, look, is that the candle where we need to take some off the table? It's a big upward pointing shadow. It's a great exhibition that the supply side is coming in and taking control away from the demand side. How did the demand side respond the next day? Not very well. Not very well again. And then kind of ebbed away from there. I think you're a little bit a bit of a nervous Nelly if you go on that candle in and of itself. I don't think it's enough. 250 is not really a big round number for me, to be honest. And these aren't definitive, signals that supply side is grappling control. does it confirm this? There could be an argument for it. But long story short, honestly, if that was my position, with all the trends still heading up, the price action still fine, I think you'd be jumping at shadows. I'm a little bit more interested on this candle here because we're starting to break beneath what did prove itself to be thank you. Okay. Yep, definitely just shout at me if that's the case. Sorry. Look, that's where we go. I changed over here. I didn't change over there. We're talking about SKS and for about 2 minutes. And I was pointing to this chart here. This candle here. And that's the one that might make a little bit more sense now. And we were talking about whether that in and of itself is the signal to take some risk off the table. Really, all we're trying to decide here is, are we going to take 1/3 off the table? And I don't think we're going to do it there. And let me just get rid of that so you can see it a little bit better. But this candle here, I think, is the one that gets my attention because we've moved beneath that point of demand. And that point of demand is the lowest point beneath between this little short-term downtrend here and this next short-term uptrend. But we didn't close beneath it really until this day here. And that's where I think you kind of say, well, and plus that day with the big upper shadow as well. I don't think you can really continue to run with a full risk position on this. Let me just change that around. So I think on this day here or the day after, well, practically we're going to go a -1/3. And I will change the colour of that, don't worry, so we can see it. And I reckon will be red forevermore. And then, look, it heads back up the next day and you go, oh, well, I'm really annoyed that I did that. I didn't really need to. That's okay. I've still got 2/3 of my position. And then we get sort of this day here. And we're probably now starting to think, actually, that probably wasn't such a bad idea. Should I offload another 1/3? Again, I don't think that in and of itself is the deal breaker, but I think today is. Because we've got the little gap and run. We've got a pretty low close here, and actually we've closed sort of in that zone there, and certainly definitively beneath that point of demand there. So I think there's no harm. There's no harm. Look, hey, if you want to give it another candle, no complaints from me. Remember, this is not a black box system, as in the rules are rigid and concrete and set. This is a common sense system. So you're looking at a candle, and it's a value judgment, unfortunately, and you have to make the value judgment. I can only spend an hour with you every Monday night trying to teach you what I see, and then you say, well, I want to do what Carl does, or I want to do it my way, and that's okay too. But common sense approach, is the demand side totally in control and therefore justifying us having all of our risk on this, or is the supply side starting to grapple control and therefore requiring us to get some money out of it so we can go do something better with that cash? We don't want to be stuck in this while it's going sideways. Forget it going down. We just don't want to be stuck in it while it's going sideways even. So I think we're at best a 1/3 risk position, and it could really, actually, the other key factor is here, this is the first close in this whole sequence, well, since that candle, but in this whole sequence here, beneath the trend ribbon as well. So we've got something objective there, not subjective. And yeah, I think that's the best way to go. If you wanted to go the whole lot, you could. I'm of the mind of maybe giving it literally one more candle, but I'll let you decide how far you want to go with that one. SKS, I suspect it's probably been a decent trade up to this point, but nothing lasts forever, unfortunately, in markets. It looks similar here, and I get why people will ask about these, because they haven't needed to ask about them up to this point. So, now we've got some issues, as I say. Again, looking back, is there something we should have done? Because I reckon maybe on this candle here is when I've written that in the past, FRP. That candle is not enough to do anything about it, and none of these are. And even today's candle is just pithy. It's just doing nothing. I'm guessing it's not the most liquid company anyway, so it can vibrate like this. It's still just holding above the long-term uptrend ribbon. I can't give it much more room though. And again, we're talking about knocking 1/3 off the table, and I think if it's going to close, beneath that light green ribbon with a full black candle, so maybe we'll try and draw that in to give you sort of a visual representation of what it might look like. Might look like this, and this, and that, and that. There we go. Maybe, don't worry, it'll happen. I want you to go away, and I want you to go back. There we go. Something like that. I think we're going to do the sensible thing and just and go minus 1/3. But like I say, that first shot across the bow like that, and then if it doesn't do what we want, we can get out of it pretty quickly from there. But just getting some off the table, I think, as a minimum. love it to head back up, but we need a contingency plan for if it doesn't. ARN, again, no surprise, Mick's asked about this one. It's been fairly robust up until now. I'm not sure what we were talking about it, what we said about the past. 2 decent black candles, but these candles are not, out of whack with what we've seen in the past, to be honest. Not a huge amount of volume today. Look, pretty similar sort of stuff, isn't it? And I'm totally with you, Mick, that it looked magical here. And with these little ones, anything goes. And we go into these eyes wide open. We know the risks, and we also know that when they're terrible, they're really bad. We don't want to get stuck in them. So let's say that, well, look, I don't think we need to do anything just yet, but if we were to do something like that, then I think we have to take some action. And all the way down there with 3 black candles, I think we're doing a bit more than minus 1/3 if that were to occur. Okay, so let's say a severe precautionary measure. I don't know why I wrote one there, but something like that if that were to occur. Okay, that's the offline request. We're going to go now to, and I'm sure you've been screaming at me to change the screen in these messages of Art saying, hi Carl, I'm looking to go for a fresh long on RUL, DVP and BOT. Okay, well, 2 of those are in my shortlist for tomorrow, Avant, so you're definitely on the right track, I think. Let's have a look at RUL first, which is ironically is the one that is not in the list for tomorrow, but not far off it. We have come back to the dark green zone. It is doing its job. Don't forget it. And it's so, this is the most important thing I'm going to say to you today. Don't forget that these things don't actually exist. Okay, they don't exist. I just made them up. That should give you incredible confidence in the system that you're using right now. But actually, they don't exist in space and time. So let's take them with a pinch of salt. But history shows, and your experience shows. Okay, it's not just. There's something about them, isn't there, where they do tend to act as areas of dynamic demand, and that's what we're seeing. So that's a great start. Okay, there's a history there of the long-term uptrend doing its job. Next thing we want to look at is that's trend. Okay, the short-term trend is indeterminate this time. It's amber, but we can see that it's starting to turn up. So that's okay. It could be better, it could be up, but this is a turnaround play. The next thing we want to look at is our price action. Okay, and I'll just draw a little bit of it in. Let's go here, let's go red, and let's start from here. We can start from anywhere, but let's start from there. And I'm marking off higher highs and higher lows for a short-term uptrend. And when I see them, lower highs and lower lows for a short-term downtrend, and trying to get this zigzag pattern. Okay, we actually do have a little move down here. And what does a zigzag look like? If we were to take that zigzag and to draw it on a piece of white paper, okay, would it look something like this, which I've told you many times is what we call good price action? Well, first of all, we want it to be an uptrend, don't we? We want high peaks, rising peaks, rising troughs. Okay, so we do have that, and then we want to look at the quality of the price action, or is it more sort of like this? Okay, and that's it's just not as good, right? This is great price action. This is not as good price action. You've never heard me say that's bad price action. Okay, it's just not as good, and we're okay. Look, this last we don't know where the trough's going to be, because to get a trough we would need to see a candle that has a higher high and a higher low to the current one. Okay, because today's candle is actually the commencement. It's important you get this. Today's candle is the commencement of a short-term downtrend. So lower high, lower low. I know some people have microphones on to shout at me when I don't change the screen. That's wonderful, but maybe if you could pop them off until I make a mistake, and then you can turn them on, okay? Because some of that noise is coming through, and I'm guessing people can hear that. Sounds like somebody's having a conversation on their phone. There's the high, there's a high, they're lower, you can see that, there's a low. Make it a capital, and there's a low, you can see that. So we won't know that this is a trough that speaks to this peak until we're heading back up the other side, and we've got a candle potentially that looks like this. Okay, and it's going to get hollow in a second. So when we get this, I'm guessing because that person's on the phone, they can't hear me, and they can't turn off their microphone. Maybe I can do it. Hold on. Let me see if I can find. Out of all the people here, I'd have to find the person that has the offending microphone, and I can't see it straight up. That one, that mute, that one, mute. Okay, I think I might have got them. I did. Aren't I clever? Okay, so once we have this heading back up the other way, then we would start to determine how it speaks to this one, and therefore whether it does indeed have the good price action. There you go. Long story short, I think Avant asked this about this one. I like it, Avant. The trends are holding. The price action is starting to be good again, and we're starting to move back to predominantly white candles. Lots of starting, isn't there? Lots of starting. We need some confirmation. And you know what would be confirmation? This candle here. Okay, this candle's a great start. Don't get me wrong. It's in the zone. It's holding the zone. There's demand in the zone. But I think we want one more. And I think when you see that candle like that, ideally with an above average volume, we can see how we're printing below average volume here. But if we can't get above average to tell us that we've got that excitement, that interest, that demand coming in, and we've removed a bit of supply out of the system, because there's going to be a bunch of latent supply in the system. Do you think how many people got stuck in this one or feel that they got stuck in this one? You know, they're waiting to get out at high prices again, maybe towards 3. So bit of volume and that candle, and then we're back to the races. And on that basis, we would go plus 1/3. But I think we're still waiting for confirmation. Nice little case study for us. Avant, we're going to go to your second one, which is DVP, and actually a nice little segue. There you go, look at that, because we've got that definitive candle today, and we can see the above average volume. If we zoom out, okay, both turnaround plays look subtly different in that, if we go zoom and normal, there we go. This is, I guess, this is a turnaround play where you're going from a short-term downtrend, right, potentially to a short-term uptrend. And the last one, RUL, it was always short-term uptrend, isn't it? It's re-establishing the short-term uptrend. I reckon the RUL one is less risky, order of magnitude, than the DVP one, just because that one's, you know, continuing the uptrend, where this is trying to change its trend. The other thing that strikes me here, apart from these giant red boxes, which will become useful in a while, so let me just keep those for now, we've obviously looked at this in the past. I'm not sure what that was about there. So let me just get rid of some of this other stuff. But how sketchy the price action is up to this point. I mean, there's a lot of overlapping price action. You know, you'll often hear me say, look, the leopard doesn't change its spots, right? So why would Develop Global all of a sudden start printing beautiful, clean price action? Despite that, despite my reservations about that, I still ran it as a feature chart tomorrow, because I like to have a mix of setups. That is, a mix of continuation setups, so double greens, a mix of the long turnaround setups like we just saw on RUL, proper turnaround setups like these, aggressive setups, and of the turnaround setups that I saw in my list tonight. I actually thought this was one of the better turnaround setups out there. So it got promoted, and it also, you know, don't ignore things like that as well. And the wonderful candle, and the fact that it closed so close to this old point of supply here, which I'm guessing wasn't a point of supply last time we looked at it, because we just hadn't drawn it in, but since then has proven to be one. And look, I don't think it's that wide. I think it's more sort of in and around here, and I'm looking at the bodies and the shadows there. But our close today suggests that really that's not an issue, because if the supply, the latent supply, latent supply could be there. That's the definition of latent. Like maybe it's there. I don't think it is there, so I'm pretty happy with that. But then you have to say, Avant, well, okay, turnaround setup, nice white candle. Actually, more recently the price action is looking good. If you don't believe me, I'll draw it in for you. And I really do want you to get in the habit of drawing these lines on your charts. And if you've got TradingView, there is this. You actually have this equivalent tool on there, and you just make sure that it holds the holds the tool, so you can do continuous drawing. But no, I was going to say, look, the last trough is at or above the second from last peak. It wasn't quite the case, because we did get a close down here, which encroached in on it, but got out of there pretty quickly. So look, not ideal price action, but still pretty decent, and everything together, I think. it deserves its place tomorrow in my feature list. Having said that, remember, you have to then take the setups and do the next step, which is your tradecraft. And your tradecraft says, well, that's a really strong setup from a demand supply environment transition. So transitioning from potentially equilibrium, which is what we were before, into demand side control. But what is my risk reward? And that's your tradecraft. And I think this is a strong setup, but I don't do anything more than that in your shortlists and your shortlist, your feature charts, because that's not my responsibility. That's your responsibility. I do a lot of the hard work for you, but I want you to take it to the next stage and say, well, out of the three, for example, hypothetically speaking, out of the three turnaround setups I had, DVP had pretty good price action. Actually had good candles. Yeah, it had nice volume. But in terms of reward to risk, if I was to get in and and have a stop or start to think about exiting risk, it's compulsory. I'll have to exit some risk down here. Right, I don't know what candles I'm going to get between now and then. I might exit some before that, but I'll definitely have to do some beneath there. Well, what is my risk reward on this trade if there is a bleeding big supply zone in and around here? And look, it's a zone. It's not a point because it's diffuse, because you can see where there are upper shadows and lower shadows and really the battle between demand and supply. And clearly in this churning, a bunch of traders got in and they've been stuck in it all this time. Now, doesn't mean anyone is still holding it, but there is a high probability some of them are holding it, and they're looking at getting back to there as their opportunity to undo their mistake and go out and go do something different and say, I'll never trade this again. Not all of them will, but some of them will. So potentially that's a supply zone. And if my minimum risk is this, is that the right word, minimum risk, then do I have one-to-one? So I'm not going to give you the answer to that. I think you can work it out, and I think you can compare this setup. Let's say I had another turnaround setup that had a clear 2-to-1. Well, and the price action was just as good and the volume was just as good. Now you're starting to be able to choose between the two setups. Hey, that is if you're not going to take them both. But if we've got limited capital, we can only choose one. We're learning how to pick between them. So, look, an interesting case study for many reasons there, both in terms of the setup itself, but also in terms of potential reward to risk. BOT is, I think, a little bit easier for me because this is a continuation setup, isn't it? It's still long-term uptrend. We can, again, just see how effective that long-term uptrend ribbon is. And to be fair, the short-term trend ribbon does its thing as well. Having said that, didn't quite do it as well as it could have there, but it's a pretty decent rally through here, some nice candles. So, a decent candle today on some good volume. I would have liked a higher close. I shortlisted this one, but it didn't make the feature because of that close. And I know that's really pedantic, but I love my high close candles, and that was just off because what it's telling me is, look, I know there's supply in here. I've seen the supply there. It's telling me that there's a little bit of supply just creeping in at the end of the day. And don't forget, these traders had a choice. They had a choice: keep the faith at 50 cents and not worry about the fact that it fell last time from 50 cents and they didn't get out, and they regretted that for the last 2 weeks, like kicking themselves. I knew I should have got out at 50 cents. A few of them saw it get back to 50 cents today and said, not this little black duck, not again. And some of them got out. And we don't want to see that. We want to see total confidence. But it is a very strong signal. Look, it's sort of like an 8 out of 10 order of magnitude, because everything else is checking out. We would like, ideally, we haven't seen yet, a little dink. And by a little dink, because I don't think we've got lower highs and lower lows here to make a trough and make this sort of a pattern, right? So this sort of a pattern, we haven't got that yet, and that's that would make it an even better setup. It would get it closer to the mythical, legendary 10 out of 10. Strong setup. Could I add risk on this? Well, it's in the shortlist, so in theory, yes, I could, but I didn't shortlist it, which means I felt there were better things out there. What are some of the quote-unquote better things out there? Well, let's have a look at some of them to put these 4 stocks. I can't believe I'm already nudging 25 to, and I've only talked about 4 stocks. Let's put them into perspective. Ansell. And hopefully some of the stuff I've talked about today, waffled on about, will make a bit more sense. Let's go zoom because we're looking for really strong showings of demand side control, and you don't get any stronger than this huge gap up. There's just no trading here. There's no sells, no sell orders between here. Nobody was willing to sell a single share, despite a 7-8% move. What does that tell you? Normally, when things go up, people want to sell. Or that's gotten expensive, or that's too high to buy, or better. No, it's like that's up 7%. How do I buy some more? Where do I buy? How get me in, right? Like we're splitting hairs here, aren't we? Between, so we're not splitting hairs. That's a silly thing to say. We're the opposite of splitting hairs. Is what I should have said there. Between RUL, DVP, and Botanix. Okay. What I meant to say was we have been splitting hairs for the first 4, and now we're not. That's what I meant to say. Okay. Commonwealth Bank no longer splitting hairs here either. Very strong demand side showing. There's the DVP. That's again a similar sort of overlapping price action, smaller stock, less liquid, but I think definitely with today's candle warrants the entry. That one is just stairway to heaven, as is that one. Gold, I'm guessing a few of you got that. That's an IZZ I talked about today, the Chinese large cap stocks. I think looks great. Larvotto looks very good, of course. Emeco. So these are I think less hindered. Another turnaround play. Maybe worth working out the reward to risk into these 2 points of supply. Interesting. Clear as day on that one. That was my state. Big gap and run here. A bit more of a turnaround set up. But is it a clearer signal of demand side control than, say, DVP? I don't care what they do. I don't go, I like DVP, I like its projects. I don't know what Main Pharma does. It sounds a bit boring. Hey, I don't care what they do. I just want to know which chart is the picture of definitive demand side control. That one's very strong. PPL's very strong. REA and TCG. You get the picture of the shortlist. Okay, let's keep moving. Adonis has got JBH, which I think he must have got tagged on today. When I say tagged, not completely devastated just yet, but that's an interesting candle there. Thoughts on JBH? He says ASX got slammed on missing earnings today. Profit, I don't care. Adonis, why I got slammed? It's irrelevant to me. Okay, let's skip that bit and just talk about the candle. Is that a species-ending event? Yes, I think it is. I don't think after this, using my model, you could continue to hold a full risk position in JBH. It is a massive, massive supply side candle, because you've got to think that at one stage, this was, and I don't know the course of sales, but at the very least, it had at some stage today a candle that looked like this. Hold that thought. Looked like this, looked like that, okay? It had an open here and a high up here. So that's what it looked like. That is pure demand side price action, but it didn't stay like that. Somebody started to sell, and it created a candle that started to look like, and I have to make it wider because I'm going to put a little shadow at the top of it. At some stage, it started to look like that as a candle, didn't it? And more supply came in, not more demand. More supply came in, and they didn't like the result as much. And they pushed it down here. And the people who were buying had second thoughts. They couldn't sustain that buying in the face of this new selling. They started to pull back and go, well, why are these people selling? I thought it was a good result. Maybe it isn't as good as I thought. Maybe I better stop buying. And then by here, those people who were buying in the morning probably thought, oh, geez, this isn't looking good. I better start to sell some. And then everybody was selling. And everyone was selling until we got down to here actually at one stage and ended up with much the candle that we have now. Of course, that's going to be black. And then we had only a tiny little bit of buying at the end to end up with a candle that looks like the one today. But that candle is speaking to you like every other candle on the chart, and it's your job to listen to what it's telling you. And for me, we've got a bunch of demand that's come into the market. They got filled. They got excited. You can see the volume, lots of demand. I know there's lots of demand because there's lots of volume. Okay, volume is buying and selling. So there must have been lots of buying, but also there was selling, and more than enough selling to overwhelm that buying and push the prices down and down and down and down, and then at the end, not enough demand. So 1/3 or 2/3, we know what the candle means. Well, what do we do about it? it's a massive candle. I don't think I could do less than a 2/3. I think I have to go minus 2/3 on this one. I still think we want to keep a little bit in the game, a little bit of skin in the game, because more than likely, if you're on JB Hi-Fi, much like Adonis is and has made some good money on this one, it's been a great trend. So let's just keep a little bit, and on the basis that there's every chance that trend still re-establishes itself, but on that huge supply side showing, going to take some risk off the table. I'll do your US one in a second, Adonis. It's also an offline request, that is Microsoft. Go to Ben. Hi, Carl. You never forgot to do my crypto last Monday. Yes, I think you mean I did forget to do it. I forgot to do a few cryptos. So let's do them now. I'm going to change screens because if I don't do them now, I'll do the US stocks and then I'll forget them again. And that's the problem. I always forget to do them after the US stocks. So I want to do your Solana, which is SOL, USD, obviously. And we'll just take the Coinbase one or whatever comes up first, because I don't think it'll matter. We've got largely sideways price action. Yes, we're trying to bounce off that zone of demand. There's every chance it does, because it's done it 2 times very strongly before, and before, say, October last year, it also has done it. So yes, from that perspective, I can't see any reason why it can't do it again. Candles are still a little bit meek and mild at this stage. I would love to see something more like this candle before I would take the risk that it's not going to bounce this time. Okay, so I don't think we've seen a definitive demand side response at the zone of supply just yet. A close above the short-term trend ribbon would be better. Higher troughs, in addition to that, would be even better. Good price action would be better. But it's up to you whether you want to trade this range. You're going to say, look, you know what, this is my gig in life. This is how I trade. I trade ranges. I try and buy at, on a good, nice signal out of the long-term uptrend ribbon, and I try and sell up here. That's not my style of trading. I'm not saying if you were to do that, you're wrong. It's just a different style to what I do. My style of trading would say there's nothing to see here. It would move on very quickly because there's just no definitive short and long-term trends or inkling that short-term trend is realigning with long-term trend just yet. So I'm a pass on that one, but that is a personal preference. I did also get asked about Ethereum, yes, last week as well. So let's do that now. And that is looking pretty rubbish, actually, and vindicating my selling of a substantial amount of my Ethereum up at 4,000. And, I'll hold the rest for another day, but I don't feel so bad about it now, given that that's the case. You're bottom of the range, but there are no signals. There are no demand side signals at this stage. I mean, it's still largely a wall of supply from here. Will it have another day? Probably. But I want to see at least some indication that the demand side is doing some good stuff, and that typically starts with big white candles, even in crypto, and we're not seeing those yet. So I think patience is a virtue in crypto. If anybody's traded crypto, they've probably also learnt that, and we don't have enough to go on just yet. And it'd be remiss not to talk about Bitcoin also. For consistency, we'll go to the Coinbase, and that is very much a sideways. I did sell some, as you know, just above 100. I'm also keeping some for the same reason. I would love to buy some back. I think down the track, nice interaction with the long-term uptrend ribbon normally is good and healthy, and we can see in the past, get rid of that thing. In the past, is not unusual. Okay, so if I start to see this sort of consolidation, and we're talking 3 months down the track, aren't we? And then this sort of price action and this sort of move, patience is a virtue in crypto, then I would happily add mine back in, even if I have to pay more. But until then, we're in equilibrium, and that means sideways, and potentially out of that, up or down. Down's a possibility also. And the final one that I did get asked about last week, and I didn't quite get to it, was Dogecoin. Craig asked me about this one. So let's have a look at that as well to end our crypto sojourn. And what will we do here? Which one will we pick? We'll do Coinbase. That's the least inspiring, perhaps, of the lot of them. Ethereum and this one vying for the title of least inspiring. There's nothing doing there at all. And something I have learned, apart from patience is a virtue in crypto, is when it's hot, sell some. Okay? If you don't, you will bloody well regret it. And this is where my model of not being all in and not being all out shines, baby. It shines. Like, when crypto's hot, sell some. Okay? You don't have to sell it all, but bloody well sell some. If you've been trading crypto for any length of time, I think you can see the value in that statement. Let's go back to stocks now and get to AIZ, which was doing pretty well, and it's not doing poorly at all. It's just very, very slow. And you should expect, again, the leopard will not change its spots. It's a slow mover, and it's still moving slowly, but the trends are intact. So I don't think we need to do anything more with that. Not managing a risk, but not buying any more just yet with the last couple of candles just yet. Boss Energy, of course, I did have that pleasure of interviewing Duncan Craib, the CEO of the company, Friday week ago. He's very bullish on the company's prospects and on the uranium price. I'm less so on both because I think the uranium price is going sideways at best for a while. The company, from the company's perspective, it has turned up, which is good news for Boss Energy shareholders, but not yet a definitive uptrend in terms of what it's doing at that long-term trend ribbon. The short-term trend is up. I think that's really important, and I think that's definitely a big tick for it, and it's certainly acting, short-term trend ribbon is certainly acting as an area of dynamic demand. The price action obviously also has improved to the point where it is again rising peaks and rising troughs. That trough, we don't know where that's going to end, but otherwise, for the most part, it's pretty solid, but it also looked about as solid as it does now around here as well, and then it just completely rolled over. So until I am absolutely certain that that's not going to happen, and that would be some price action that shows that long-term trend ribbon is no longer acting as a zone of dynamic supply, but is definitively acting as a zone of dynamic demand, then I can start entertaining longs on it. But until then, no, I have no interest. I have no interest in shorts either. It's just a non-event for me at this stage. Let's go to Sue, who's asked about Bitcoin. I have talked about that also. Again, watch the candles. Big white candles mean demand's coming back in, and that's when you can follow the herds, follow the masses. Until then, what's the point of it all? CAT still looks fine. Last time we looked at it, FRP, and I'm going to do a copy and paste today. Look, today's candle, I think at one stage was quite disturbing. It's the opposite of the JB Hi-Fi candle, in that at some stage today it was a big black candle, but rather than supply holding into the close and continuing to exert its influence into the close, instead we saw demand come in. Push the price back up. Didn't quite get a white body close, but still a high close on the candle. And certainly no reason to do anything but continue to hold a full risk position. The other thing I think today's candle does that is wonderful is it really does, I think, set this area here as a key zone of demand. So the short-term uptrend ribbon and the low of that candle together constitute an area where we know there's demand in the system. Now, if we were to start trading beneath that level, not just trading there, but closing beneath that level, and we know what the candle will look like if that occurs, like if we close down there, it's probably going to look something like this, then we've got some big problems, and then we need to take some action. But until then, I don't think we do, and we won't. I won't, you'll do whatever you want to do. But yeah, I'll be concerned. Look, because we've kind of taken out a little point, that was a little point of demand? No, I don't think it was. I think that's all kind of sort of one area, but I'd have to do some work offline to confirm it. Look, definitely a third there, and depending on the severity of the candle, maybe you could think 2/3, but let's just keep moving here because it is late. And go with minus 1/3 on that close beneath that zone there. TLX still looks fine. There's nothing for me to do here. I can't see any definitive supply side zones. It got pretty close to $30. $30 I think is a round number. I think you want to just knock a few off. You could do a sixth if you wanted to, but there's a number there. It's actually not showing a great deal of trepidation at it. How high did we get here? Did we get sort of within that 1% that I talk about? which would be 30 cents in this case. Yeah, we did. So, look, if you took a little smidge off the table there just for good measure, you've got the luxury now of just waiting to buy that smidge back, don't you? I don't think you need to do anything. FRP, obviously, until something bad happens, and we're not even close to anything bad happening, so I don't think we need to talk too much more about that one. Let's go to San. Please don't put any new ones in. I know it seems like it's early to say that, but it's not. It's not. So I know where we're going to finish with Nicola, and we'll do all requests that are in the system. Let's go to San, who's got a bunch of US ones. We'll do those at the end. GDX. Is it too late to get into GDX? Ask Francine. I think it's that's a silly thing. You can't ask me whether it's too late to do something because I'm a trend follower. So the answer's always going to be no. Like it's not too late unless we saw a great big JB Hi-Fi candle. Then I'd say okay, well now it's too late. But we're not, and the trends are still good. So it's not. I can't say it's too late because I can't tell the future, but I can say that it's still a picture of demand side control. You heard my comments earlier. Forget GDX. GDX is irrelevant. I mean, I think that's the place to be, isn't it? Because you buy a gold stock, and I know you're like Nicola. Francine. It's not Nicola. Francine. You'll end up with RSG, right? You'll go, I better get a gold stock, and it'll be RSG, no doubt about it. You buy it up here, and then it'll be here in about 5 minutes. Okay, you won't get any of those other ones that are starting to move up, like RRL. They've been in my list over and over again. Remelius, not that one. RMS. They're doing really well. You'll end up with the crappy one. So if that bothers you, and that's going to be you, then buy gold. I know you're saying, well, buy GDX, it's just as good, but you're still buying stocks, aren't you? Mine caves in, whatever. I guess there's some diversification there. But surely this has just been just slapping you in the face every day because look at that one. It just keeps going up. Look, yes, no objections because the trends are still very good. Is it too late? No, I don't know because I can't tell the future, but yes, happy with that one. I had it in the list a day or two ago, I'm pretty sure. Robert Scott, ART, Airtasker. Yeah, look, tough one because no real clear signals. Like, they're not great candles, but they're not like, that JB Hi-Fi, well, I have to get out. There's a cluster of them together, not ideal, but not taking out the light green zone, not taking out the last point of demand. Like, there's just not much you can do apart from just feel sick, as it doesn't give you a signal, as it just sort of peels off like that. But yeah, clearly it's more sideways than up again. If you haven't done anything, I don't think you need to do anything just yet because these two candles are very good, this one and this one. But you can start to peg areas where you have to do something, like you must do something. You can't leave it any longer. And certainly a close beneath there. Look, I think that's a minus 2/3 at least, but possibly given that if you were to get down there, when you think about it, if you were to get down there, you'd have to do something like this, wouldn't you? And create lower peaks and lower troughs. And then I think actually it's probably, and you're beneath the short-term trend ribbon, and the short-term trend ribbon would be acting as dynamic supply, and you would have a predominance of black candles. So I don't think that is a minus 2/3, is it? That's a minus 3/3. So it can happen like this, where you actually skip the minus 1/3 and the 2/3, and you just go straight to 3/3 because of the nature of the candles. But it is more likely to occur on these little companies that are illiquid. Then less likely to have the demand in there that pushes them up to make that trough, to give you that point of demand that gives you that place to set your next exit under. But yes, we still have to have a plan of attack from here. SFR still looks good. No complaints about this one. Today's candle obviously not ideal, but nothing sinister at all to worry about there. We talked about copper. Copper still looks good. This is actually a really good case study for one of the turnaround setups within the uptrend. It's done the right thing at the long-term trend ribbon like it has done in the past. I put it in the list, I reckon, here. That's my day where I think the price action is and the candles have turned strong enough. The short-term trend is trending back up. It's developed enough to warrant having risk go back in. Might have even run it on that day there. Little nothing day. And that means nothing to do, but still full risk position for me. If you don't believe me, I'll type it on the screen, FRP, for whatever that's worth. Let's go to MP1, which is actually starting to the corner. You would know that, I think, don't quote me, well, actually you can quote me, it was 100,000 million %. That was a minus 1/3 there for short. That was in the feature chart. And it was probably a feature chart there and 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 there. But it hasn't been a feature chart for quite a long time, actually, because it had this huge rally through here. I would have loved to see some more volume, and there really is no real volume marker here to accompany this. Now, that could just mean that actually the supply has completely exhausted itself, or there just actually wasn't much shorting in here, so there was no short covering. But that's a bit weird in itself. It's not impossible, it just means it's not what I normally expect to see. I normally expect to see a substantial volume response with that rally. And if it had that, I'd feel more confident about it. In the absence of that, look, I think it's one to keep an eye on. It's a little bit ho-hum for me now. But should it start to print this, and I think that's why you're asking me about it, I'm guessing, Robert, then it's going to look like a turnaround play. And if it does do those things, you'll see it in the lists. You know what to look for until then, but obviously there's still a fair bit that needs to happen. That long-term trend ribbon, which has in the past acted as dynamic supply, needs to begin to act as dynamic demand. Let's go. I've actually done MME there for you, Brett, previously, BC8, which still looks strong. I think last time we said a low close, maybe beneath that level we would remove a third. I think maybe we said at most we'd have a 2/3 at the risk position. Do we need to change that? Should we be back to full risk position? No, I think we're fine. If you're at 2/3, stay there. It still looks very good, and we don't need to add risk because today's shadow, and there's a shadow there, and there's a shadow there, and I think it's pretty safe to say that this area is a zone of supply that needs to be consumed. I used that terminology in some writing a few days ago, and I love it. I love that idea of that there's supply there and it needs to be consumed by the demand side, doesn't it? So I'm going to use that word from now on, consumed. So that's literally what needs to happen. And Brett, we've done DVP, so we talked about it a lot. MSB, look, MSB, I'm not very good at trading MSB. I tend to get it wrong far more often than I get it right. But yeah, look, I think there are a few problems in supply. This point of supply here is clearly below that point of supply. That could indicate question mark. So, sort of building supply. I have a question mark about that. At this point in time, we've still got higher peaks and higher troughs. If we were to close beneath here, that would change that, and I'd be a little bit concerned, particularly if we were to do it on a black candle, low close candle. Then I would take some action. So that's me, and I would not be able to hold a full risk position if that were to occur. And just given the nature of this one. For safety, given the building supply, so this versus that and that, I think that's a minus 2/3 event for me, and at most having a third risk position. Until then, happy holder. A white candle, must be white candle pushing into that supply zone. Happy to add some risk, but maybe a bit further away from that than the other scenario. Michael questioning wrong screen. I'm pretty sure I'm on the right screen now. Thank you, Michael. Definitely let me know if that occurs again. OPT still looks fine. I know there's a little bit of a pullback last 2 days. Famous last words. Nothing sinister there. Still full risk position. You can see we actually got to zero risk position, I think, at some stage down here. And I reckon on that day I put it back in the list. Which day? That day. And then 100% certain it went back in on that day and that day. I'm pretty sure it went on that day as well, and I think it's still full risk position from here. You know what to look for to move off full risk position, don't you? But for now, I think that is the case. Let us go to the next one, which is OCC. Almost ditto. I mean, honestly, I have no idea what either of these companies do, but it hasn't stopped me putting them in my feature list. I think that one went in on that day, probably 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 on that day. Or I think you want to take some off the table on that day. and then I think it went back in on that day, and I don't think it made it in on this day because of the upper shadow, but it's still a full risk position for me. I can't see anything so sinister in these last few candles. They are nothing candles in terms of supply side control. They're really still telling me there's plenty of demand side control there. Add risk, not yet. Wait for the next big white candle that looks like anywhere I've drawn an arrow in the past. SRV still looks very good. A little bit like resembling that long-term uptrend turnaround play, isn't it? Because it did. Well, it is. Not resembling, it is. So, came back, hit that, up she goes. Very boring, very slow, but also very much FRP at this stage. Nothing to do there. Nice big white candle, add some risk. Doesn't probably qualify today. Concern around supply at 538. I'm not concerned about the supply. I don't think the market's concerned. I'm going to be concerned when the market's concerned. It doesn't look like the market's concerned, so why be concerned? Evan. King, Botanix, which we did. Looks good, could be better. Bit of supply up there. Yes, I'm happy to add risk, but that is a personal choice. II, is that the one there? No. A1. What is this one? AI1. AI1? Yes, I know it went in recently, didn't it? Happy holder. There's nothing at all that looks particularly sinister there. And FRP is today a plus 1/3 candle. I don't see why not. Was this in my shortlist today? I don't think it made my shortlist today. Maybe just it slipped out on the liquidity filter. But yeah, FRP and plus, I think today you can add a little bit of risk. No complaints at all. I think that looks pretty good. Let's go to BB1, which did make the list, I reckon, on this day here. You know how to trade these. You're putting some skin in the game, see how it goes. We're not going to get too excited about these things, but we're going to have some fun with them while they're moving up. And it's still moving up. Today's shadow is not enough to push me out of the trade. Happy to hold whatever risk we've got on that and see where it goes. You know what candles to look for. Is 50 cents a round number? Oh, look, watch the price action at 50 cents, especially considering it's spent so long around 25, because common sense suggests that other traders, not you lot, you guys are geniuses now, right? You're the top of the class, best in the business now, right? But there are other investors out there, not as smart as you guys, who like to double their money. Is that fair to say? And if they bought something at 25, their little robot brains go, oh, 50 cents, double my money, better sell now. Not because it's a bad company, not because they're certain it won't go any higher, just because they doubled their money. Oh, aren't I clever? Ooh, let me tell my friends. So expect some supply there, because it was spent a long time at 25 cents. Hey, maybe I'm just being unnecessarily cynical. MVP is still a very valuable player, in my opinion, and I love today's candle, and that's why I ran it as a feature chart, as I talked to you about earlier. So that is an FRP and a plus 1/3 for me. I like to see where this one goes, and again, it's a little bit of skin in the game, because anything could happen. I love this big burst. I love the big white candle on the volume. I love that stuff. It's pulled back. It's a shallow pullback, relatively speaking, and it's going up again. And I did mention earlier in tonight's proceedings, we said, well, just keep an eye out for this point of supply here. But I think we've actually got pretty decent reward to risk until we get there, don't we? And compare that to DVP. I want you to be, a coincidence, DVP and MVP, but I want you to be able to compare and contrast these things. LRV, I still think looks very good. We talked about that before. I'm still FRP plus 1/3. I'm still FRP, and today's candle I still think looks very good. Plus 1/3, volume's good. Any round numbers coming up? $1. $1's a big round number. You'd be silly to ignore it. Okay, but there's every chance. Now we're in the 80s. We're going to get there. What did Ben say about the shit show? Monday. What happened on Monday? Crypto last Monday, shit show. I don't know. It's always a shit show here, Ben. You never know when the next shit show is going to occur. I'm sure Matthew meant nothing by it. Let's continue the shit show. A1M, it wouldn't be anything else on a Monday night. In live market analysis, I still think that looks good. Confidence level on this. Oh, look, it's a warm 7 out of 10, isn't it? I mean, there's so much it has to battle. The leopard trying to change its spots. But it's one of those, I think you can have a little bit of skin in the game. Just to put this into context, I know I put it in yesterday on its candle. You can see the volume coming in. I think it's the start of something. But look at the leopard. I think it's the start of something, but you've got to be really, really patient with it, okay? So having a small addition to this one and just letting it do its thing for a while. Obviously, while price action is good, candles are good, but, you know, just be patient, I think. I think it's fine. If you're panicking about that after one day, Peter, you know, don't. SMI, or maybe Peter didn't see it unless he's just asking about it as a turnaround play. Yes, it's a turnaround play. That's why I put it in the list yesterday, exactly for that reason. Did I put this in? I can't recall. I don't think I did. But it came up today. It came up today, and I did look at the chart because it was one of the interesting movers in tonight's evening wrap. Again, leopard and spots. There's a reason why it didn't get in tonight. Just this wall of black. I just think it's going to take some doing. And we've got one white candle. You know, maybe there's three, but really there's one proper one here. Amongst this sea of black, it's just constant selling. There was a fund manager or fund managers or individual holders that just every day this thing traded. It didn't matter if the market was up or down. It didn't matter whether gold was up or down. It didn't matter what the New Zealand dollar did against the Australian dollars. These guys are mining in New Zealand. Oh, with the NZD versus USD, they just wanted to sell. I suspect that order is finished. I think the volume probably also suggests that's the case, and maybe there's a bit of interest coming back into it. Yeah, look, I think it looks interesting, Peter. I don't know. Do you have the staying power on this one to see where it's going? And that's all you need to answer. That's the only question you need to answer. Yes, it's turning around. Yes, I agree. There's a reason to add some risk, but how does it compare against all the other setups we've seen tonight? Very interesting. Do you want to take that on? My opinion is no, I wouldn't take that on. I might take something like that on instead, which looks a bit cleaner. Yes, it's a leopard spot, it's a congestion, but it seems to be finally breaking through and actually really, really close to a buck. And I like it when it does price action like that at a buck, because in theory at a buck, market should be thinking, I'm taking profits here, I'm getting out, I'm transitioning from demand side control to supply side control. But here we are pretty much at $1, and that's not the case. We're still very much demand side control, so $1's not really a problem. So I think that looks quite good, and that's the reason why I went FRP and also plus 1/3. We'll do that one, Nicola, in the US very, very soon, as we're about to head back up the list. In fact, we're going to do it right now. So let's head over to the Chrome screen. Thank you for your kind comments there, Matthew. Let's go to David, who is offline, wants Microsoft, but I think Adonis also wanted it as well. And I'm not sure where I'm typing there, but let's try it again. MSFT. Oh, okay. Well, that's I think I know what I did. I went to the big room there. Let me just do one thing, because that's obviously wrong. It's night time. Let's go to here and say that Microsoft has some problems, doesn't it? This looks like it's about to roll. Show me one time before today. Let's zoom out. What a fascinating chart. Show me one time before today where that long-term uptrend ribbon acted as a zone of dynamic supply. Okay, maybe here. See how it pushed into the long-term trend ribbon and then got repelled down? One could argue there. One could certainly, not argue, but say definitively it was there. So we need to go back to December 2022 as the last time. I don't think you can count that. I think we're going up. If anything, it's probably more acting as an area of demand there than supply. It's a bit of both. But let's say, because it's more dramatic, December 22, that zone acted as a zone of dynamic supply. Like, it has not happened since then for over 2 years. This is last night. Friday night was the first time. That says something, means something to me. I certainly can't be long Microsoft. I cannot have a cent invested in this. Oh, but Carl, it's Microsoft, it's blue chip. Surely you'd want to have some in your super fund. Well, not me, no, because I have rules. And when the long-term trend ribbon goes from acting as dynamic demand and, just definitive dynamic demand for so long, Like, look how many times it tried to do its job here, and then it just said, like, I can't do it anymore, Carl. I've tried as hard as I can. I've tried to soak up as much supply as I can. That's it. I can't soak up anymore. And in fact, now I'm a zone where supply is re-exerting itself on a rally. Candles, price action, that gap. I cannot own a single Microsoft share. You can do whatever you want with it, but I can't own any. Adonis actually asking, is it a short? To the letter of the law, it is. It is now a short for me, but it's an aggressive short, isn't it, Adonis? Okay, or a turnaround at best turnaround, but at worst aggressive, if that's the right way to say it. But yeah, absolutely yes. I would short Microsoft, and all the same rules apply. Look, if it starts going back up, whatever, I'll manage my risk, but I would just take a little bit of a look in. And we've seen it happen on many Aussie stocks, and I want to think, was it Ordinate? I mean, is a good example of where, for the longest time, it was long-term uptrend, and then you just see that zone transition, and down to you went MP1. I'm just looking at just tech stocks that are coming to mind. There you go, right there. That was textbook. And hey, is this going to happen to Microsoft? I don't know. I mean, it could be this, Adonis, couldn't it? It could do that. Anything's possible. We can't tell the future. But we're adding a little bit of risk on the chance it could be this, because we don't know the future. It could be that. We make our best guess. We put our money in the market, and then the market does the rest. Okay, let's head back up the list now. Microsoft 7 LTR bounces, yes, and great numbers. Says Matthew. Microsoft is a short. Yes, we've got that one. Let's go OFP. I need to change screens back to here. How are we going for time? As usual. OPFI. Let's try that. OPFI, which is Opthea. We did this last week as well. Wonderful. How good's that? FRP. Is it still FRP? Look, it is. I know that Friday's candle is starting to say, not FRP, takes them off the table. But it's not a definitive supply side signal, is it? So until I see one, I can't. And hey, you can do whatever you want. I have to follow the rules, and there's nothing there either. Like I've got on the weekly chart. Not worried about that. So I have to go FRP. It's going to stay the course. And as scary as it is, I know somebody's on this. If you've asked the question, you're probably on it. Sometimes it's frightening to hang on. I think you've got to stay the course, and the market will tell you when to take some off the table. Okay, so we're going to stick with that one. Click save. Let's go to the next one, which is ACAD. This one's from Nicola. ACAD. Arcadia Pharmaceuticals are potentially for a turnaround play. It almost looks like Microsoft, but turned upside down, isn't it? So we're looking at this for a bullish turnaround setup. Last couple of candles haven't really done the job for us though, have they, Nicola? I would have said this candle here is the perfect setup, just about. That one there, it's a perfect setup. A little bit of a pullback. I'm not going to read too much into that. It does demonstrate, however, that these are riskier setups by their nature, but I still think you're fine. If you got in on that day or the day after, I wouldn't panic just yet. Where would I start to panic? Look, I don't want to see it close beneath, say, 1790. That's beneath the short-term trend ribbon and a couple of those little demand points. And certainly I don't want to see it get beneath the long-term uptrend ribbon. If it does, you swear, you curse, the cattle probably start running away because it knows what's going to happen next. And then you get over it and you make the next trade. But might not happen because it's a half decent, at least, turnaround setup. AGI in the US as a continuation play. Yep, definitely continuation play for you, Peter, there. And nothing sinister going on at all that I can see. Short-term uptrend, long-term uptrend, price action very good. Candles predominantly white, but there are a few black ones creeping in. Let's go to the weekly chart to see if there's anything there that's bothering me. And no, it actually looks even better on the weekly chart than it does on the daily chart. So happy with to stick with that one if you have it. And if you don't have it, then I think you can add risk on the next high close. Okay, so Friday's candle's probably not it. So let's just go NHC plus 1/3, click save and keep moving. Did I click save on Opthea? I can't remember. and it's all happening here. Let's do undo, because I forget to click escape like that. Let's go undo, let's click escape, let's go Opthea, let's click on that, let's go here, let's click save for next time, and moving up the list. Don't want to miss anybody's suggestion, request, that's all. META, let's go Meta Platforms. What's better, Microsoft or Meta? Clearly Meta, very happy with that one, no complaints, nothing to do here but FRP, obviously. Let's go FRP, and let's go next high close plus 1/3 also, because there's no reason why we wouldn't want to continue to add to this one, and I'm pretty certain that if I go out to the weekly chart I won't find anything, because that's all blue sky from here. NVDA, which we had some comments on it last week, and what was I saying? I was saying minimum 2/3, no, get out 2/3, and if it was to close beneath maybe the long-term trend ribbon, and it didn't, coincidentally, and it's gone straight back up. It's frustrating. This is very frustrating for me. I hate it when things do that. Like, look at that. They had a look, went beneath, and just, no, straight back up. So I did say minimum exit 2/3. I would have said something like close beneath the long-term trend ribbon, zero risk position. So I think, you've still got a third in the game. I don't think you need any more than that, because it doesn't warrant it just yet. But kudos, full credit to NVIDIA for pulling that out of its you-know-what, and just bouncing straight back up like that. 1, 2, 3, 4, 5 candles in a row on Friday, even with a downward shadow. So sticking with your 1/3, and frustratingly potentially looking to add back risk. And that is how the cookie crumbles. Unfortunately, sometimes BABA, Alibaba, which looks good, really good actually. It's a turnaround play. I know Friday's candle wasn't ideal. There's probably going to be all sorts of tariff stuff going on here, isn't there? I know we shouldn't talk about fundamentals, but I can't help but think it. Let's go here. I guess most of their stuff, most of that commerce is happening inside China, isn't it? It's not necessarily going to the USA. I don't know enough about it. But I can say that, look, I should stop talking about the fundamentals, because the chart looks good. And I don't mind it on a next high close. Obviously not on Friday's candle, but next high close plus 1/3, as a turnaround play. Yes, I'm watching this. Yes, I'm concerned about it, but I think next high close, you're sort of into that shadow high. You could probably still make 1-to-1 into there, double check it. CSCO, some big names coming out tonight. Cisco, hopefully at some stage. There we go. That looks good. No complaints here. Weekly chart. Pretty sure this is, not quite all-time high, but nudging towards it. So look, happy with that. Just needs a high close, doesn't it? The price action could be better, because we've got this big nasty black candle and then straight back up. But that candle did encroach on the previous demand zone. In the perfect world, it shouldn't and it wouldn't. But no, I'm really nitpicking here. FRP, if you've got it, next high close plus 1/3 if you don't. Click that, click that. Don't know if I click saved on all the other ones, but anyway, doesn't matter. Oh gosh, clicking all the buttons tonight. Escape. Click that, and NVIDIA. I don't think I typed anything on there. Okay, PLTR is the next one. I think it might be the last one also. And what did we say? Full risk position, next high close plus 1/3. So that next high close is actually that candle there, coincidentally. Well, to be fair, I mean that's a next high close too, isn't it? Really, because you have to count this gap as a white candle. It's still pretty high close. What do you do here? Copy, paste. Oh, Carl, surely you have to get some out. Surely you've got to take some profit on this one. Nope, not me. And look, AI at its best, isn't it? I'm pretty sure we're done here. I've done Microsoft, and that's it. If I haven't done one of yours, this is your chance. BA, just put it in. If I haven't done it, just put it in. Now's the time. I'll do the next two that pop up. Turnaround play, similar to the other one, which we said was pulling back a little bit, was at ACAD mainly, maybe Nicola's. It's starting to do something there. Adonis, next white candle, high close, I think you can go as well. I'm just looking at this bit here, up at 200. So look, let's get a nice white candle, sort of closing above 190, showing us that this area here is not a problem. And then, yes, turnaround set up for me. I think you're right. Okay, that's it. Nothing else has come through. I think we've done. We've got all the offlines and the online. So, obviously, thank you for joining me today. I actually better do this. I promise I'll do it super quick tonight. Everything we've talked about tonight is general advice. Consider it carefully or seek the help of a financial professional. Before you act upon it, you could lose money if you trade. Never forget that. Never forget it's you, that's not me, who's responsible for the stuff you do. With that in mind, it's been a pleasure chatting with you this evening. Hopefully you enjoyed the session. You learnt a little bit. I had fun also. And, stay tuned for the recording. That'll be out later on this evening. And all the best for your trading and investing. Till we catch up again. Bye-bye for now.